Shares in the world's most valuable company, Apple, fell as much as 7% in extended trade, taking the stock briefly below its trillion-dollar market cap. Disappointing guidance and a change to reporting overshadowed its fourth consecutive quarter of record earnings. Elizabeth has rejoined us just to bring us up to date on how the market is viewing these Apple numbers. Morning, Elizabeth.
Good morning. Yes, the market is not taking Tim Cook's word that they are going into the holiday season with their best product lineup ever, and he's very bullish on the stock. Investors not buying it this morning. They are seeing that weak guidance for the holiday period. They're saying Apple might not sell as many iPhones as expected, and that decision to stop reporting units for its iPhones, iPads, and Macs, that could be one of the reasons why, because of possible weakness going forward. Now, Apple did beat on both the top and bottom line this last quarter. It said earnings per share came in at $2.91 versus estimates of $2.78, so 41% year-on-year growth in earnings. Revenues also beat, coming in at $62.9 billion, 20% year-on-year growth, and average selling prices for Apple iPhones now close to $800. So high margins in Apple's hardware business still, but concerns about what that business might look like going forward.
The argument made by management, people get fixated on volume numbers of specific products, and we want people to take a broader, more holistic view on the other category that includes the Apple Watch and so on and so forth, and services revenues. Surely the market understands that guidance.
The market is so fixated on these unit sales that it might be able to understand longer term this idea that we need to look at the overall revenues on a yearly basis. But right now, investors were pretty shocked by this decision. I was reading through the earnings call transcript, and Tim Cook made the analogy that if you go to a store and you have a shopping cart, your cashier doesn't ask you how many units you have in the cart. All they care about is the overall value of what's inside. So that is the message that they are trying to give, but so far, analysts not really buying into it.
No, and again, you know, the caveat is the numbers were brilliant, weren't they? I mean, in terms of the actual physical numbers they turned out. Should I do it one more time? Because I just think they're amazing. A 32% rise in net income to $14.2 billion US. Overall sales rising to $63 billion, up 20%. But that said, why did the CFO say this? Apple has launched an unprecedented number of product launches over the last 6 weeks, and Apple has some uncertainty around supply and demand balance for some of these products. But surely, and again, as the analysts point out, aren't we supposed to be agnostic towards this? Because you know, the buyers aren't price conscious anymore because now they spend over $1,000 on a phone. A
little bit of anomaly there, saying, you know, we're focusing on these supply and demand concerns, but we're trying to look at the big picture.
But we created those because we've had a load of I don't understand it. We've launched all these products, and hence we've created opacity in our demand picture.
And they weren't completely clear on how those supply and demand concerns will play out. They just continue to say that they've launched an unprecedented number of products. You know, along with the 3 new iPhones, they also this week launched new iPads, new Macs, a new Mac Mini. So they're saying there could be concerns in rolling these out, also highlighting concerns with possible emerging market sales, and that was something that they drilled home.
It's really smart from Apple. Here we go. Let's look at the counter argument, i.e., let's add opacity by taking away numbers on our key devices. Let's add opacity by saying we're not sure what all these amazing products we've launched are. Take the hit now on the share price rather than over the longer term by showing a slow drip down in unit sales.
It does feed into that mentality that we need to look at this longer term picture. And one point that's interesting here is that Apple will start reporting margins in that services business, and it's expected that that's a huge margin business. It's not a hardware, it's not as affected by some of those supply
You don't have to worry about
demands.
if it's Chinese or US workers.
Exactly, exactly.
I would just say, I mean, a broader market comment here. Rising inventory levels are cropping up all across the US economy right now. And so it showed up there, but you see it in technology, you see it in energy, you see it in housing. It raises some questions about the strength of demand running into the first quarter of 2019, and it sort of reinforces the point you're making about adding a little bit of opacity here because you perhaps don't want to reveal your hand on those inventory numbers.
And this isn't just an Apple story either, right? I mean, if we're looking at smartphone sales overall, they have been down this quarter, and that plays into the inventory question. It's if Samsung, if Huawei also are struggling potentially in the next quarters going ahead.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.